I think we got to start off with the action that we saw on Friday, Alex. I mean, why do you think the markets ended the day higher? We were just showing some of the moves a second ago. A lot of questions about the Ukraine deal, a lot of talk between the U.S. and also European officials. One European official saying it's time for a new leader of the free world. A lot of bold talk there. Why do you think markets ended higher?
Well, I don't think markets ended higher because the U.S. may step aside from its traditional leadership space. I think it was just pretty standard market technicals. It was the last trading day of the month. There was cash that needed to be invested. So most managers didn't print that going into their quarterly or monthly reports. But also, I do think markets were looking for a sign of domestic strength. This is it. And this really commits the president to his policy, which some of those tariffs will be good for consumer stocks in the U.S., will be good for small cap stocks if it actually does play out. It's also pretty rare, though, that we're this close to a tariff deadline and no one seems to know exactly what's going to happen, with an administration fairly split on whether the outcome of those tariffs is inflationary or not for the American public.
You know, Alex, a lot of people have called for a broadening of the market or the rotation to other sectors, but this rotation, it seems to be more defensive. We were just talking about consumer staples having their best month in quite some time. What do you make of this rotation, the fact that it's also going to defensive sectors and also into bonds? People seeming to be a little concerned about some of the volatility in the market, also obviously trade policies having an impact, I would imagine. Is this a good rotation? And the fact that also that the sectors that we're rotating into, they're seeing earnings estimates revisions to the downside.
You know, to some extent, any rotation out of what had been just a super concentration, the Mag 7, is a positive thing. So we'll take that because statistically it's healthy. But practically, we agree there's some real risks to the downside here, and investors are looking for a haven. You know, what I think they're really saying is inflation is coming, right? The University of Michigan report shows 1 in 5 people think there'll be 10% levels of inflation in the coming 6 months. That's a frightening statistic. And with that, folks are looking for a haven in the storm. And you see that particularly with the staple spending. But, you know, now there are alternatives that they really need to look at, because it's the first time in a long time that folks have to look at inflation not as transitory, not as fixing, but perhaps as something that's going to increase and will be very difficult to solve going forward.